anyone who puts the majority of their money in gold and silver now could go away on a long holiday or go to sleep or whatever and wake up in 5 years' time and they will not be poor.
Silver has corrected roughly 45-50% from its historic peak of $121.62 US an ounce. It was set on January 29, 2026, currently trading in the upper $50 to $60 range. Now, this correction was triggered by margin hikes, hawkish monetary policy, profit taking after an explosive bullish speculative rally. My question, Egon, is where to with silver from here?
Yes, well, the correction was bigger than I anticipated, but that's what you get with silver. It's not unusual to see silver moving like this, and this is why we've told our clients from the very beginning that if you want to sleep well at night, you buy gold only. For 25 years, that's what we've been saying. And there have been periods before, of course, when we recommended silver from $20 to $30 to etc. But right now, we think it's a fantastic opportunity. I recorded a YouTube video a week or so ago saying that buy silver with both hands. And I really believe that silver is now in a phase where it's going to move a lot faster than gold. How quickly we will move up again, we shall see, but I think it could be relatively quick. The first move here, back up to over 100 and more than that. And of course, longer term, I have been saying that both silver and gold will go to multiples of current prices, but silver will, more or less, the gold-silver ratio, which is the gold price divided by the silver price, is going to go down probably half or even more in the next few years, which means that silver will probably go up to 3 times as fast as gold. But it's not going to be an easy journey. We started at $4, it went up to $20, down to under $10. It went up to, as we know, $50 twice, and then came down into the teens or even 10. And now for the first time, we have broken the $50 properly since 1980 when it first touched it. But we have to remember where it came from. You say that silver has corrected by 50% roughly since the end of January. But we have to remember that in the last couple of years, even at these prices, silver has more than doubled, and so has gold. If you're a pessimist, you do like the journalists looking at gold and said, well, gold has been a bad investment, and they start with 1980 when gold was $850, then it crashed to $250 in 99. But of course, nobody mentions that between 1971 and 1980, it went up from $35 to $850.
Yeah.
Therefore, you can choose any starting point. Silver has done fantastically well. The problem is that when you recommend something at a level where it's come down and is cheap, when it hasn't come down but it's just staying at a lower level, then the public is not interested. The majority of people love buying high and selling low. Even we who have wealth preservation clients see that. You got a massive inflow when gold and silver went up in January, for example. And still, we've been standing on soapboxes for years and told them to buy. But people react on price because that's when the media reacts and everybody says, gold is going up or silver is going up. We went into gold in 2002 and silver on a much smaller proportion. We went in because at $300, we said that gold was unloved and undervalued. And that's the time to buy in investment when nobody wants it, but it still has massive value, massive potential. And that's the case with silver now, in my view. Of course, people who have bought it at $120, they're scared now, and probably many of the short-term traders have got out. But if you're looking at a long-term wealth preservation, this is a fantastic opportunity, again, to pick up silver. I see silver for many reasons, technical reasons, cyclical reasons, and obviously fundamental reasons, going up substantially in the next few years. And of course, that's a combination of investment demand and industrial demand.
So right now we have central banks buying gold at unprecedented levels, and the Morgan Stanleys of this world recommending their clients have a holding of gold in their portfolios at 20%, whereas they were referring before a half of 1%. So, and we've had JP Morgan CEO, we know this, Jamie Dimon, telling us that there is an economic hurricane heading our way. What do you make of all of this, and how will gold react to this economic climate moving forward?
This, what you're mentioning about the banks or the investment banks recommending gold now, and I said up to 20% of total assets, I would say that's the minimum percentage. We in 2002 said that, you can hold up to 50% on gold in 2002. And that's, of course, been an extremely good advice. Now I would say, because of the risks I see around the world, that 50% is fine. But what do you do with the rest of your money? To stocks, which is the biggest bubble in history, put it into bonds with inflation rising and with the borrowers going to have real problems in the next few years, both sovereign borrowers and corporate borrowers, to repay the money. And governments will never repay it, as we know. They will just print more money, making the currency weaker by the day. And then you have all the properties a bubble, private equity is a bubble, private credit is a bubble. So my problem is, even if you put as much as 50%, what do you do with the rest of the money? Certainly not cash. Banks are not safe. And as I said, the cash will deteriorate by 10% a year now in the next few years because of money printing. So, what else do you do with your money? Of course, you should not put all your eggs in one basket, but you could do like Rockefeller did also, put all your eggs in one basket and look after the basket. And I would say that anyone who puts the majority of their money in gold and silver now could go away on a long holiday or go to sleep or whatever and wake up in 5 years' time, and they will not be poor. They will certainly have protected their wealth, at least in real terms, not in dollar terms, of course. But they are likely to enhance their wealth in real terms also by the next move we'll see in the precious metals. Gold is the king of the metals. That's what you should hold. That should be the majority of your position in precious metals. Again, physical, outside the banking system, all of that, of course, in the right jurisdiction. In the beginning, we said only gold to clients, especially with the ones who were nervous about volatile markets like silver always is, or maximum 20% in silver. Now we've said you can put 30% in silver or your total precious metals holdings. We think that's responsible because of the major move we see in silver in the next few years. But, as I said, it's not for widows and orphans. If you're a nervous investor and if you just want to be safe and can't take the volatility, just stick to gold. But if you are prepared to not gamble, but buy silver as not just wealth preservation, but also as an investment, which is different to wealth preservation, then silver, in my view, is going to be a very good investment for the coming years. But as I said, with major volatility, but the trend will be strongly upwards for both gold and silver.